I am on Wall Street. Right over here is the New York Stock Exchange. Today we are going to talk about my favorite stock trading technique. It's called buy low, sell dear. Some people call it buying the dip. Whatever you want to call it. It's a great way to make a lot of money and minimize your risk. However, remember, all stock trades have risks, so this is not stock advice. This is just what I do. All right, so check it out. Buy low, sell dear. Most people, when they buy stocks, they are looking for stocks that are on the peak of going up, 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 and away. That's not what I do. I look for the biggest losers. I kid you not. They publish lists of the stocks that are crashing the most each day, the ones that have dropped at least 10% in a day, and those lists are published. That's what I look at. If the stock has reached its 52-week all-time low, that's a winner. That loser's a total winner for me. Why? Why? Because only two things are going to happen when a stock reaches its 52-week low, typically, and there's some variation. Oh, pigeon don't want to move. Check it out. He's not afraid of people. All right. Typically, only two things are going to happen when a stock reaches its 52-week low. One, okay, and that's the best case scenario, it's going to go up, even a little bit, but you're going to make money. One way or another, you're going to make money because you're at the bottom, and there's only one way to go from the bottom, typically. Now, in a bad situation, and this does happen, sometimes the stock will go so low that it gets delisted and you lose all your money, or the company goes bankrupt or out of business and you lose all your money. That happens. How do you minimize the risk of that happening? Well, that's not so hard, actually. You pick companies that are too big to fail. Facebook, Google, Apple, all these companies are not going to fail, even if they hit their all-time low, typically. There are always exceptions. Bed Bath & Beyond's a great one. That crashed and got delisted and bankrupt everything. All right, so the idea here behind this is, while you're minimizing your risk, you're not completely getting rid of it. So what does that mean in terms of action? Well, don't put in more money than you're ready to lose, ever. Never bet more money on stocks, and I'm using the word bet because it is a gamble. Every stock trade is a gamble. Consider it like gambling. If you're not ready to walk away with losing all the money you put in less money until you reach a point where you're happy with losing all that money. I'm not happy, that's the wrong word, but not going to go broke over the thing. All right, so now you're going to put in only as much as you're ready to lose when the stock reaches its all-time low, because there's probably only one way, and that's up. Now, how do you sit there? What do? You sit there, you watch it? No. You create what's called a limit buy and a limit sell. Okay, if you're not familiar with trading stocks, that basically means you set a minimum and maximum amount of money that you're willing to buy and sell the stock for. So let's say I'm going to do fictional numbers here. Okay, you're ready to buy the stock if it crashes and reaches $10. So you put in a limit buy. When it reaches $10, it's automatically going to buy. And then once you own it, you can put in a limit sell. When it reaches $11.95, you made 19.5% on your money, it'll automatically sell. Now let's talk about when to buy it, when to sell once you own that stock that you bought in the dip. Okay, the dip. All right, when do you buy? When do you sell it? Okay, do not be greedy. That's the number one rule of this technique. Okay, you cannot have fear of missing out, FOMO. You have to be okay with making consistent money, but not necessarily maximizing your profits. You're trading risk in exchange for lost opportunity, meaning there was opportunity that you're going to miss sometimes, but in exchange for that, you're limiting the risk of what you're doing. You sell when the stock reaches about 80% of its historical average highs, meaning not its peak when it randomly shot up, but look at the charts and figure out it's hit. Let's say this random made up stock I just said, it's hit $14 8 times in the last 2 years. So you aim it for like $13.50 or something. When you sell, you'll make $3.50 on a $10 trade. That's 35%. That's great, Sell it there because it's very likely to reach that. Why is it important to have this very likely to reach that idea? Because you don't want to sit longer than you have to on the stock. You only make money when you sell it. You don't make money buying it or selling it or sitting on it. You make money when you sell it. So what do? You try to flip it as fast as possible, if that's possible. Not always possible. All right, so now you got this limit sale for $13.50, and now when you flip it, you make your money. How long are you going to have to sit on it? There's a way to figure that out. It's based on the historical volatility of the stock. How fast does it do this? the charts. Okay, some stocks are very non-volatile. They have almost flat line. They make really slow curves. Okay, those stocks, you can be sitting on that money for a long time until it comes back up. Okay, high volatility stocks probably come back up really quickly. So why is that good? In general, a lot of people think high volatility is bad. I think it's great. Kind of like the loser stocks. I think they're great too. The biggest losers. Because high volatility means you could flip it and make the money faster and then do it again and again and again. If it's low volatility, it's typically safer bet. But you have to wait a long time to get your money out of it. You can't really make a lot of money unless you're putting in a lot of money. And if you're putting in a lot of money, you're probably better at stocks than me at this. So, whatever. The point is, you're looking for high volatility stocks if you want to limit how much time your money is tied up in that stock. You can't touch that money until you sell it. That's the point. You don't want to ever sell at a loss. With this technique, the only time you sell at a loss is if a company announces bankruptcy. That's the only time you sell at a loss. Otherwise, you just hold the money, let it sit. If it keeps going down, 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 sooner or later, the stock is typically going to go up, 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 and you'll get your money. You might have to wait a really long time. Sometimes that happens. You hope it don't, but it's inevitable. If you do this technique enough times, sooner or later, you're going to have to sit on a stock for a really long time. The word is to hodl it. HODL is a play on letters, H-O-D-L, like the word hold misspelled on purpose, H-O-D-L. The idea of that, oh, too much shadow in here. The idea of that came from someone's typo, whatever, it doesn't matter. You got to HODL your stocks, okay, which is like holding your stock. Don't sell it at a loss, ever, unless the company's about to be delisted or bankrupt. That's the only time you do that, because then it's kind of like saving grace, whatever you can get out of it. Otherwise, just sit on it. Because you were at the bottom. Therefore, sooner or later, it's going to go back up if it's a company that stays in business and stays around. That's the whole idea of it. Okay, you never really lose with this, except when the companies go under. It's for the only time. So it's a great technique. Buy low, sell dear. My favorite strategy for stocks. Again, this is not stock advice. Do what the heck you want. Don't do what I say. But hey, learn from me anyway. Thank you all for watching. Like, share, subscribe, and I'll see you all in the next video. I just realized I ended the video right in front of France's Tavern and Museum. This is the coolest place. I've been in here for a business meeting once. It is the site of Washington's farewell to his soldiers. Soldiers? Officers. I gotta read this sign. It's pretty cool. I didn't even realize I was gonna end up here, but it's an awesome place. You gotta come in here for the museum, or if you're a drinker, go down to the bar. All right, see you all in the next video. Thank you for watching.
Yeah!